Hey everyone, welcome back to MSTR Daily. My name is Matt. Happy New Year, and in this video we have a lot to talk about. First, we're going to cover the special stakeholder meeting taking place on January 21st to talk about 3 proposals, including one to massively increase the authorized Class A shares. Then we're going to talk about the massive announcement that Michael Saylor made on Friday, where he discussed that in Q1, MSTR is aiming to issue $2 billion of preferred stock. So we're going to go over what that means and how large this new pool of capital is that MicroStrategy is going to start tapping into to increase their Bitcoin holdings. And then I briefly want to talk about the crazy price action that we've seen for MSTR stock, because if you've been following this for more than a few months, you know that we hit a high of around $540 at the end of November and then fell 50% to $285 before now climbing back to like $350. We started strong in 2025, and I want to talk about what to expect with this crazy volatility moving forward. Okay, for our first story, let's go over the important line items for the emergency shareholder meeting coming up in 2 weeks. We did briefly cover this a few weeks ago, but with the absolute terrible takes that I've seen online, this is definitely worth revisiting and spending a little more time on. The first proposal that we will be voting on is increasing the authorized Class A common stock from 330 million to 10.33 billion shares. Now, James in this post forgot to write that this is an increase in the authorized shares. This isn't going to randomly add 10 billion shares to circulation. That doesn't make any sense, and if someone believes that, I have a few bridges to sell them. And if you look at some of the largest companies in the world like Amazon, Apple, Google, they have tens of billions of shares authorized. This provides room for equity issuance and stock splits. There is a limit to how many of both a corporation can do, and it comes down to corporate governance. So this vote gives the management team flexibility to accretively issue shares to add Bitcoin per share. It gives them room to do massive stock splits, and anyone that votes against this motion should just sell their shares now at a profit, because it is clear they don't understand the strategy and will sell at a loss if there is a major downturn like what we just saw in December. Also, the reason why this increase is so massive is because they want to do it once and then be set for literally decades. The press this has gotten is the reason why they only want to do this once. So they set the authorized share limit super high and want to do one quick vote to be done with it. So if you're going to vote no, then just sell. I'll pick up your shares in the order book. The second proposal is a motion to increase the preferred stock from 5 million to 1 billion shares. This is directly related to the new issuance of preferred stock, and we saw that announcement on Friday, which we will look at in a moment. Again, they need to increase the limit previously set so that they can issue more preferred stock and continue moving forward with their strategy. The third proposal is to grant equity awards to new directors, which is very normal for companies, and I will be voting yes for all 3 of these proposals. Okay, let's talk about this new preferred stock announcement. Last Friday, Saylor posted that MicroStrategy is seeking to issue $2 billion of perpetual preferred stock in Q1 of 2025. And we are currently in Q1, so this is in the works as we speak. And part of the preparation is the vote to increase the preferred stock, which is happening in like 14 days. And I will say, when I first saw this announcement, I did think, wow, $2 billion seems a little low for MicroStrategy. But then I remembered that this is the first time they're issuing preferred stock. So this first round will likely test the waters with what the dividend will be. Will there even be a dividend? Will these preferred shares be convertible into Class A shares? What will the pricing structure look like? Basically, there are a lot of questions around what the structure of these instruments will be. And this first round of $2 billion will be the testing round, similar to how MicroStrategy had to issue a few $100 million of convertible debt to figure out the market, build relationships, and optimize for the most accretive instrument they could create for that market. So this is exciting. The preferred stock market is in the tens of billions of dollars in size, and having a player like MSTR enter the market with downside protected exposure to Bitcoin will be very interesting to see. I'm still reading up on this topic and learning myself, but if you want to dive right in, Dylan LeClaire posted a fantastic description of what a perpetual preferred stock is and what MicroStrategy's version could be. So I will link that in the description below. Make sure to check that out. For a very brief overview, we do have this chart provided from Bitcoin Overflow, a friend of the channel. He shows the major differences between the convertible bonds and preferred stock. These markets are very different, but they do provide deep pools of capital for MSTR to dip into in order to continue their execution of their Bitcoin acquisition plan. And don't worry, I will keep a very close eye on this preferred stock issuance, and we will talk about it every step of the way. Now it's time to talk about price action in the stock. MSTR has had a wild few months. The stock was at $100 in August at the low, and then it peaked at like $540 at the end of November, and is now around $350 at the time of recording, which is up $75 from the low just last week. So the volatility has definitely not been disappointing. But what many investors forget is that volatility is in fact the product. The convert market wants high vol. The options market wants high vol. Investors generally want high vol. So do not expect the volatility to disappear anytime soon. It will continue to rip to the upside and then rip to the downside. We will gamma squeeze up and then reverse gamma squeeze down. In a clip I'm about to play, Josh Man talks about the tail wagging the dog. The tail being the options market and the dog being the price action of the stock. The MSTR options market has a notional notional value of around $80 billion, which is just a little less than the total market capitalization of the entire company. I know a lot of people do not care about the options market, but when it comes to MSTR, it does move the stock, so it's important to at least mention. And because of the massive options market, it tends to drive the market. When the delta on call options increases, market makers are forced to hedge and buy the stock. This reinforces swings to the upside, but it also reinforces swings to the downside. When the delta on puts increases, the market makers also short more and more stock, which then increases the sell side pressure. This is a gamma squeeze to the upside and a reverse gamma squeeze to the downside. We talk about all of this in MSTR Pro and how you can profit big time from going long gamma in one of those squeezes, of which I think we are entering right now. If you decide to join, you also get access to the MSTR tracker. The link to that is in the description below. So listen to this clip from Josh Mann as he explains what is happening with the market makers as the stock goes up and down in these large moves.
The cart leads the horse. The options market just becomes so large, notionally speaking. And you have speculators like us, people like us, but you also have a large number of institutions that are buying in because they're perceiving that there's going to be QQ inclusion, and maybe they were a little bit ahead of time, so they bought puts to protect themselves in case you had a downtrade. So if you bought in at, let's say 220 or 250, 300, you're going to buy some puts that are a little bit below the market. Those are not some puts; those are large size because these are large institutional players. And you think that's a bearish trade? That's the thing about the options market. The dealer himself, it's really an AMM, like an automated make. It's a robot. They turn around and they say, well, I just got hit on puts, so I have to go short. That's their hedge. So let's say if it's at the money, they're going to short half. So they got 1 million shares. They're going to go short 500,000 shares. They go, okay, I'm ready. The market goes down a tick. They have to sell another 10,000 shares. It goes up a tick. They have to buy them back. Up another tick. Now they have to go long. They have to go. It just gets to be like a horrible. I ran that book when only humans did it. It was the most stressful job I had in my life. And so what happens is everything just becomes this overswinging pendulum. And so we went down pretty hard, and then we went up. We started moving. And once we started moving up, those puts that they were buying, because of the perception of QQQ, they started sort of going away. The delta started going down. And so the street, all of them en masse, have to keep buying every tick. Oh, got to buy again. Got to buy again. It's just a rote thing. It just starts to self-propel. And then you got the retail guys, like, I bought and I advertised it, but I did one finite buy. I was very, very upfront. September 17th to September 30th is when I bought all of them. But then I remember Grain and then a bunch of his followers, they were just constantly buying. That adds up after a while, even though it's just retail. And so they set another reason for the market to start going up. So now all the short put guys, the dealers, they're buying every time the market goes up because they have to take off the hedge. They have no reason to have it on. And then they're buying more because the calls are going up. It's just this really vicious cycle.
Josh was a trader at Salomon Brothers, and I think he made like $8 million on just one of his MSTR trades in December, so he definitely knows his stuff. So what did you think about his explanation? I'm sorry if it was a bit complicated or hard to follow. The main point is that the options market is so large for MicroStrategy that it basically drives the underlying stock, which is not a bad thing. It just amplifies the volatility. So if you hold the stock, expect massive swings both up and down, and if you're a long-term holder, then just hang on. I absolutely do not recommend trading this stock too much because it can take your lunch. Okay, to finish out today's video, we need to see how insane MicroStrategy's Treasury operations were last year and how the market totally missed it because the new FASB accounting rules weren't in effect yet. But now they are, so the Q1 report in April or May is going to be crazy. This is what Saylor posted. MicroStrategy acquired 258,000 Bitcoin in 2024 and achieved a 74% Bitcoin yield. This is a Bitcoin gain of 140,000 Bitcoin. At about 100K for the Bitcoin price, this translates to shareholder value creation of $14 billion. A $14 billion increase in shareholder value from accretive equity issuance and the convertible bonds. That is insane, and they are still trading under a $100 billion market cap. The Q1 earnings report is going to be crazy, especially if Bitcoin has a strong Q1, which I am totally expecting. So with that, if you enjoyed the video, consider hitting the like button and check out MSTR Pro in the description below. Thanks for watching, and I'll see you in the next video.